Hey everybody, it's Ms. Morgan, and in this short video we're going to learn how the accounts receivable account works. You see here that I have the accounting equation listed. Assets equal liabilities plus owner's equity. We're going to use a few of these accounts for our example. The two asset accounts that we're going to use are cash and accounts receivable. And because they're assets, they have a normal debit balance, which means increases will happen on the left side. We will also use a revenue account called service revenue, and it has a normal credit balance. That means that increases happen on the credit side. Let's take a look at these transactions. We earned $500 on account. That means that we went to our customer's office and we performed some work and we have earned some money. We earned $500. We get to call that service revenue. You report revenue when it is earned, not when the cash is received. Now, you cannot debit cash here on transaction number 1 because this transaction says earned $500 on account. So we have to set up an accounts receivable account. And that means that our customer is going to pay us later for services performed today. Transaction number 2, we received $200 from that customer who's paying on his account. So we would debit cash for $200 and we credit accounts receivable for $200. Now you see my balance in accounts receivable is $300. They did owe us $500. They paid $200, so now they owe us $300. Number 3, earned $200 on account. So once again, we earned some revenue. So we would credit the service revenue account and we would debit accounts receivable for $200 because we've earned some more money and our customers owe us more money. Transaction number 4, received $250 cash from a customer on account. That means they're paying on their account, so we would debit $250 and we would credit accounts receivable for $250. At the end of the month, when we create our financial statements, we will report $700 of service revenue. Even though we didn't collect all that in cash, we have earned that money during this time period, so it would be reported as revenue of $700. On the balance sheet, under the assets section, the current assets are listed, and the cash account has a balance of $450, and at the end of the month, accounts receivable balance is $250. So those would both show up on the balance sheet in the current assets section.